Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. I'll talk about the technicals now in greater detail. So in terms of the key technicals, I think 22.5 is the key downside level that I'm watching. It's the range break. Once we broke that range comfortably from the 19,000 to 22.5, then things started to accelerate today. Also, it's the monthly pivot point. If you have a look at the weekly pivot point, it's 21.6. So keep that in your mind as a support area if we did break under 22.5 at some point, and it may be a good dip buying area. Also, if we continue to run higher, I think my main targets are 25.2 and 2700. However, I'm probably going to change that now and say 26,000 is the level that I'm looking at. So 25,002 and 26,000 are possible areas where this rally could terminate. Again, any daily price closes below 19,000, which looks very unlikely. It's what the market needs to see, and I think it's something we probably need to put in our minds for later on this year. So 19,000, very important because we couldn't break it last week. That was the swing. So once that swing area gets broken, at some point, if it does get broken, then that will be the continuation of the bear trend, probably down to 16 or 12,000. So keep that in mind for later on this year if this move proves to be a fake. So let's have a look on the charts of what's been happening and let's try to break it down. So last week I was mentioning that we got the PI cycle indicator for the bottom cycle had just come in, and there was a reason why we needed to be very careful. And just to recap as well, I mentioned that the Wyckoff pattern was starting to play out, and you can see here still very premature. Maybe some more upside there to 26,000, which I'll explain later on why I like that area, and then maybe a pullback. But the PI cycle bottom, we really nailed it last week when we said that was in, and obviously this is the time now where you probably don't want to be short. You want to let it really terminate as high as it can, and then maybe look to short it or maybe look to re-enter again. So in terms of where I think Bitcoin is going to go, I think we have to have a look at the range break in terms of targets. The Wyckoff patterns, the first stage of them, they're very difficult to measure, although you can normally get a good indicator how high they're going to go. But I think what we should probably do is take the size of the range break and equate that to where the upside move is going to be. So the upside move, if that's the case, is going to be around 26,000, and that would fit probably quite nicely with this Wyckoff pattern here. Being well above the range break area, then we could see probably a nice dip down, and then the final phase E, and that could set up something interesting, which I'm going to discuss in a moment. So if we have a look at possible and future price projections, if this move continues to play out as I expect it will, it could terminate around 26,000. Then we get a pullback towards the actual range break area or thereabouts. So let's say 23,000 to 22.5. That could be a great time to get back into the market. And then you see the final phase E play out, which I expect to terminate around 29,000 to 30,000. Now, from there, that could set up a really interesting short opportunity for the market, and we could move back down to 19,000 from there. And if you have a look at that, that would set up an enormous head and shoulders pattern there, which would give you a target of around 9,000. So this is very, very far out future projections, but this is a scenario that I'm looking at as my primary A scenario. So move up to there, a pullback, and then there. So because these patterns are quite difficult to measure, it could be 25.2, it could be 26,000, but that's the type of area we're looking for, a pullback and then a stronger phasey rally. So another reason why I think we could head towards 29 or 30,000 is have a look at this support area here. So 29,000 is acted as rock solid support. 2021, last year in September. This year when we smashed through it, we dropped through maybe $4,000, but I don't think the market's had a proper, after breaking it, the market has not had a proper retest. So when you get these type of cluster areas where the market likes to gravitate towards, I think they're excellent areas to look for medium-term shorting opportunities, and that's the reason why I think we could go in there. The only problem I have is the PI cycle bottom indicator is in, and there's the risk that this could go a lot higher, and the bottom of the cycle, this is going to last years, and this could turn into a massive inverted head and shoulders pattern. So that's the risk, but there you probably want to go short around 30 with a stop around 32 or something like that, and hope it's going to go down. So it'll be very interesting if we do get there to see what the price action is going to be like. So overall, hoping for a move towards $29,000 or $30,000. Cannot discount a rally from current levels to 26,000 over the coming days. A drop below 19,000, although far away, would definitely cause a significant decline in the market. The Wyckoff pattern is currently in full swing, and you probably don't want to trade against it at this point until it looks like it's peaked. Again, the PI buy signal that I mentioned last week is working very, very well. Okay, so let's take a look at Ethereum and work out what's going there. So the PI cycle bottom buy signal was in last week, and that's now playing out in full swing as well. Similar to Bitcoin, the Wyckoff is playing out, and it's more advanced, which suggests to me that Ethereum could peak out between 18,000 and current levels any time now. So it's much more advanced than Bitcoin. And overall, my overall target for Ethereum will be about 2,100 over the medium term, and that would be the area where I'd expect this rally to terminate or either continue much higher to 2.7. So that's what I'd be looking at. And again, you can see that this move higher is very, very advanced compared to Bitcoin. So maybe we're starting to peak out here if we base it on this alone. And the pullback area that we should probably look towards for Ethereum will probably be 1,300, something like that. If you did want to become a dip buyer on this rally and you believe that the phase E is still going to play out. So overall, Ethereum, it could be headed back towards the 2,000 level plus over the medium term. I'd say watch out in the interim for a small correction down to 1,500, probably 1,300. If you're a price sensitive dip buyer, you probably want to look in there if you wanted to play a move towards either 1,800 or 2,000. Again, the Wyckoff pattern is playing out or has played out, and the PI cycle bottom signal is now well and truly in play.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.